What's up guys, Humphrey here. So for the past couple of months, there's been a dramatic shift in the market and it's affected a lot of our portfolios. We've mentioned on the channel in previous videos that the large majority of hyper growth stocks have been struggling a lot, and there's plenty of reasons as to why, including interest rate hikes, inflation, and supply chain issues. Meanwhile, value stocks and specific sectors like energy and financials have fared a lot better. Now today, I specifically wanted to talk about Tesla. So Tesla has been deemed overvalued for quite some time now by analysts, and at a market cap of over $1 trillion and a 336 PE ratio, it definitely holds the award for being massively overvalued. But does that actually matter? We're going to talk about Elon Musk today, give you some context on Tesla's valuation, talk about some of the bull and bear cases, and at the end of the video, we're going to answer the burning question of, does the valuation of Tesla actually matter if we're investing in Tesla? First, let me give you some backstory. Tesla has a secret weapon, but it's also not such a secret because that is Elon Musk. Throughout Elon's career, we've seen him succeed time after time. So after graduating from UPenn, he attended Stanford University for 2 days before dropping out to launch Zip2. Zip2 was a web software company that got bought out, and after that, Elon co-founded X.com, which would later become PayPal. PayPal was then acquired by eBay in 2002, and Elon Musk promptly used his fortune of over $100 million to start both Tesla and SpaceX from 2002 to 2003. Since then, he's been involved with other projects like Solar City, Neuralink, and The Boring Company. So it's clear that Elon has a knack for innovation and has proven himself to be an effective leader. It doesn't really stop there though. His personality is the X factor that all companies really hope that their leadership can have. I truly believe that having Elon is a net positive effect on Tesla's stock price. Now, he always seems to be in the news for better or for worse, and that usually means free advertising for Tesla and his other businesses. Let's take a look at some of his famous media clips.
Does anybody go, Elon, maybe for yourself, but selling a flamethrower? Do we really want to connect ourselves to all these potential arsonists?
Yeah, it's a terrible idea.
You're competing with the likes of Jeff Bezos
Jeff who?
I want to be clear, I do not respect the SEC.
Fuck that, we're gonna get it done.
One thing we've learned lately is that when Elon Musk tweets, the news cycle follows him, and in fact, he does have a series of tweets in the past few minutes. Says, I'm selling almost all physical possessions, will own no house. Says Tesla stock price is too high.
Billionaire Tesla head Elon Musk.
What is he up to?
Do you see this right here? Elon Musk is seen taking in a joint during a podcast interview with Joe Rogan.
So clearly he's quite the character and has also ran into some trouble with his eccentric tweets and speaking his mind. From tweeting about Tesla stock being too high or taking Tesla private, to pumping up Dogecoin during the lead up of his SNL appearance, Elon has done so many bizarre and funny things that it's really hard to keep up with it all. While it may sound strange at first, Tesla's continued rich valuation may have to do with Elon Musk and the market's belief in Musk's vision. A truly good leader is hard to find, and Tesla happens to have one of the most influential visionaries of our time. Now, while Tesla may be expensive from a traditional valuation standpoint, it's hard to put a valuation on Elon's leadership and abilities. Tesla also happens to be a divisive stock. On one hand, there are bears like Gordon Johnson, who staunchly defends his $67 price target for Tesla. On the other hand, there's ultra bulls like Cathie Wood, who believes Tesla could reach $4,000 per share by the year 2025. The discussion regarding Tesla's stock price and its fair value can be quite polarizing, so I wanted to explain the arguments from both sides and let you decide for yourself. Now, currently Tesla trades for around $1,034 a share, and I do personally own 20 shares of Tesla in my own Robinhood account. Now, if you're looking for a brokerage to buy stocks with, I do have some affiliate links down below in the description. So if you'd like to use those links to sign up for a brokerage and get a free stock, it would massively support the channel, and I thank you in advance. Now, you might be wondering to yourself, okay, so exactly how high is Tesla's valuation? Well, Tesla's current market cap is more than Toyota, Volkswagen, Ford, Mercedes, GM, BMW, Honda, Ferrari, Hyundai, Nissan, Kia, and Volvo combined. If Tesla's market cap was a country's yearly GDP, it would place them in the top 20 countries in the world by GDP, surpassing countries like the Netherlands, Saudi Arabia, Switzerland, Taiwan, and Poland. Despite having a larger market cap than the next 10 automakers combined, it significantly trails in global vehicle deliveries. However, it does have some other differentiators, so unlike other automakers, Tesla does not rely on traditional dealerships to sell their vehicles. vehicles. Instead, Tesla sells vehicles through its website and its company-owned stores directly to the consumer, making it the first automaker in the US to do so. In addition, Tesla doesn't pay for direct advertising, so this helps them save a lot of money. Plus, they just get a ton of free publicity and advertising from Elon Musk and his Twitter account anyway. So what will the bears say about Tesla? So when talking about Tesla, the main argument Tesla bears have against Tesla is its valuation. A metric that many analysts like to use when discussing a stock is something called the PE ratio. P over E just stands for price, like their stock price, compared to the company's earnings. A lower PE ratio means that you are paying less for a dollar of the company's earnings, while a higher PE ratio means that you're going to be paying more for a dollar of earnings. As a general rule, you should really only compare PE ratios with companies in the same sector. So for example, you really can't compare the PE ratio of Apple versus Target since they're completely different businesses. As of current recording, Tesla sits at a 336 price to earnings ratio, which is well over 300. And that's also insanely high because that means when you buy one share of Tesla, you're paying $336 for $1 of Tesla's earnings. In comparison, Ford and GM have PE ratios of 35 and 8, which is significantly lower than Tesla's. This means that when you buy Ford and GM stock, you're paying way less for a dollar of their earnings. I've even plotted Tesla's price to earnings ratio against other leading automakers on this chart so that you can exactly see how much of a crazy outlier Tesla actually is. This is one of the arguments that Tesla bears will have, that investors just simply pay too much for Tesla's earnings. Just for fun, I calculated how much a Tesla share would cost if it had the same PE ratio as Ford. If that was the case, each share would only cost you $108.20 compared to the $1,000 and up stock price Tesla trades at today. That being said, the PE ratio isn't everything, and we'll explain later why investing solely off the PE ratio can cause you to miss out on potential gains. Now let's go to the other side of the aisle and see what the Tesla bulls say. So while there are many Tesla bulls on Twitter, YouTube, Seeking Alpha, and every other possible website, one of the most well-known Tesla bulls is Cathie Wood, the CEO and Chief Investment Officer for ARK Invest. ARK Invest actively manages many ETFs that focus on innovation, and Tesla is one of the largest holdings in most of these ETFs. In March of 2021, ARK Invest released a controversial research report that had many in the finance world laughing at Cathie Wood and her firm. They had set a base price target of $3,000 and a bull case price target of $4,000 for Tesla. In ARK's research, they assumed a fully autonomous ride-hailing service, and in their research they stated, quote, if 60% of its vehicles equipped with autopilot were to serve as robotaxis, Tesla could generate an additional $160 billion of EBITDA in 2025. In our bull case, ride-hail would account for the majority of Tesla's enterprise value in 2025. That's a pretty wild assumption that 60% of Teslas would serve as robotaxis just within 3 years. Now, many experts, including valuation legend Aswath D, voiced his opinion on the matter, stating that ARK's research didn't include a full discounted cash flow analysis, had incomplete forecasts on the cost Tesla would incur to scale its vehicle production, and that the value ARK was placing on Tesla's non-existent robotaxi fleet is more of a fairy tale than valuation. Valuating a company largely relies on its earnings and how the earnings compare to Wall Street's projections. Tesla's earnings have been simply spectacular, forcing analysts to constantly raise price targets to new highs. Just in the past 3 months, 28 analysts representing 28 different firms upgraded their earnings estimates for Tesla. Meanwhile, Tesla continues to outperform expectations and raise the bar for themselves. As seen in this graph, Tesla's vehicles deliveries are a textbook exponential curve. As economies of scale takes effect, Tesla has been able to ramp up their vehicle deliveries, almost increasing its vehicle deliveries by 100% year over year. Another interesting case study on Tesla is its business in Norway. So Norway is one of the most environmentally conscious countries in the world. Currently, electric vehicles hold 91.7% of the automobile market, with Tesla being the top selling car brand within Norway. As more countries become environmentally conscious, Tesla will be able to benefit from increasing demand for electric vehicles worldwide. While I don't know ARK's exact reasoning for valuing the robotaxi service so high, I do know one thing, and that's people believe in Elon Musk and his vision. Every tweet he makes gets millions of people talking about Tesla, SpaceX, or other projects that he's working on, and Elon Musk is Tesla's greatest asset and is what sets them apart from other companies. People also love the Tesla brand. Every time Tesla releases a fun product like the Tesla Tequila or even the Cyberquad, they sell out immediately. Part of the reason for Tesla's expensive valuation is simply Elon Musk. Another reason is the limitless opportunity opportunities Tesla has in front of them, and yes, robo-taxis could actually be one of them. One of these opportunities Tesla has is its subsidiary known as Tesla Energy. This energy division works on battery energy storage from homes to energy grids along with solar panels and solar roofs. As more households become environmentally conscious, solar panel usage should continue to increase. Going back to the electric vehicle portion of Tesla's business, there are still massive opportunities with the supercharger network, the subscription upgrades through software, and also a potential insurance company that Elon Musk says is being built out. Some of Tesla's business model is quite unique and sets them apart from traditional automakers such as Ford and GM. For instance, Tesla develops many of their vehicle components in-house, such as the batteries, the motor, and software. Meanwhile, other car manufacturers still rely on third-party suppliers, which could be subject to the supply chain issues. All these details of Tesla definitely add up, and the sum is its valuation, where high expectations are priced in. So is Tesla's valuation justified? Now, to be honest, guys, I'm not good enough with valuation models to actually decide that. So if any of you guys watching are diehard bankers with great modeling skills, please feel free to chime in. I personally don't think it's a great idea at this moment to bet against Tesla. And if you trust that Elon is going to remain the CEO and make the decisions around Tesla, that's probably a good bet. Now, is it massively overvalued? Yes. Does it actually matter for the future of the stock price? That I don't know. I think that if you are investing in Tesla, you must strongly believe in Elon Musk's leadership and the ability of his team. You can't solely just use the PE ratio for evaluating whether or not to buy a stock. Now, I'm going to show you exactly why with these series of charts. Looking at Tesla's PE ratio over the past 10 years is quite interesting. During the past 10 years, Tesla spent a lot of time trading either at a negative PE or a heavily inflated PE. If you were purely just investing off the PE ratio, you probably would have never invested in Tesla. And as a result, you probably would have missed out on 27,000% of gains since Tesla's IPO. Another example of this is Amazon. In the past 5 years, Amazon has appreciated a staggering 301%. However, when taking a look at its PE ratio chart from the past 5 years, we see a similar story. Amazon's price to earning ratio in 2017 and 2018 was extremely high, peaking at around 300. Now Amazon's PE ratio has compressed and is currently trading around 60. Once again, if you purely looked at Amazon's price to earnings ratio, you would not have invested in Amazon in 2018, thus missing out on tons of gains. The moral of the story today is that sometimes the valuation isn't everything. If you'd like some more content to help guide you in your journey of the market, you may want to consider joining my Patreon. In there, we have additional private content, live coaching, and a private community on Discord where you can chat with like-minded individuals about stocks and investing. Make sure to check that out in the description below. I hope you guys enjoyed today's video. I will see you guys in the next one. Peace.